I am now going to turn it over to panelist and moderator for today from our Pompano Beach office, Attorney Lisa Magill. Lisa, take it away, please.
Well, thank you very much, and thank you all for participating today. There was a whirlwind of activity that went on at the special session a few weeks ago, and we're happy to be able to discuss just the brief and overriding details. But first, I want to introduce the people that are going to be speaking today. Michael York is from Socotec US. And through 400 professionals, Socotec optimizes the integrity and sustainability of critical assets to solve client problems from conception to project execution through the life cycle. Michael leads the firm's client development and multifaceted approach to engineering, focusing on homeowners associations, new constructions, remodels, marine, land development, and much, much more. Thank you, Michael, for participating today. Next, we have Michael Kornahrens from Advanced Roofing. And Michael is the president of Advanced Green Technologies and the executive vice president for Advanced Roofing. It was formed in 1983 and a full service commercial roofing company specializing in roof replacements, repairs, maintenance services, and other facets of the roofing field for occupied buildings in Florida and the Caribbean. Michael is also a commercial solar contractor specializing in design, procurement, construction of solar rooftops, carports, and other renewable energy solutions. Rafael Aquino is with Affinity Management Services. Rafael co-founded the company in 2007 with the goal of designing a suite of services to meet the demands of HOAs, condominiums, and apartment buildings with their varied financial, administrative, and site-related needs. I know from my own experience that Affinity dedicates a significant time and effort to educating its employees, clients, and the general public in high-stress environments. Rafael is cool and calm under pressure, which is very necessary for our community associations. Matthew Mercier is with CBIZ, and CBIZ provides multifaceted solutions throughout the country with strong coverage options, a trusted reputation, and deep industry expertise to develop the risk management strategies and protection for business and personal needs. Matthew is also a CERM, certified risk management specialist, is also a CAM and has the CMCA designations. He spent the last 8 years focusing on community association insurance and as a risk manager for his clients. He just attended the special session and has an insider's perspective on the debates in both houses. My name is Lisa Magill. I'm an attorney practicing in this area of law for over 20 years, the last 5 years with the law firm of Kaye, Rembaum, which services all of Florida through offices in Broward, Palm Beach, and Hillsborough counties. I'm board certified in condominium and plan development law by the Florida Bar and have been admitted to the College of Community Association Lawyers, which is a national designation and recognition bestowed upon less than 200 lawyers nationwide. I also served as a co-chair on one of the task forces appointed by CAA to address post-Surfside disaster issues, and we've developed a set of policy recommendations and best practices for the nation after reviewing the myriad of laws that were that concern community associations in our country. So we're going to talk about, and we kind of developed the presentation into 4 different segments. We're going to talk about the mandatory structural inspections, the reserve study changes, and timelines for both. We're going to talk about roofing issues, repairs, insurance, and contractor considerations, the availability of insurance and some of the changes there. We're going to talk about insurance generally. I know there's a crisis going on right now, and really many of you are having sticker shock when the renewals come in or being summarily non-renewed and having to scramble to find new coverage. Finally, we're going to wrap up and we're going to suggest solutions. You know, what you can do right now to improve your situation, what we see going forward, and what kind of changes, possible tweaks to this current legislation are necessary to really meet the needs of the communities. So we're first going to talk about the mandatory structural inspections, reserve studies, and timelines. The new legislation creates a mandatory structural inspection. Michael's going to discuss it, and also the structural integrity reserve study requirement that we're we're all going to talk about. The timelines are every 30 years for the structural inspection, and then 10 years thereafter, unless you're within 3 miles of the coast where your first structural inspection takes place at 25 years of age, and then every 10 years thereafter. So Michael, explain to us the milestone inspection and how the legislation defines substantial structural deficiencies.
Yeah, so that's a great question. And thank you for having us and hosting this today. So first of all, there's two different types of structural and milestone inspections. I should say there's a phase 1 and a phase 2. The phase 1 is the visual observation or examination that we perform for habitable and non-habitable areas of the building. Still to be, some of these guidelines, I should mention, are also still being developed by the Florida Building Commission, where they have to provide a report to the governor, the Speaker of the House, and the President of the Senate by December 31st of this year. And we're looking for, qualitative assessment of structural conditions of the building. We're looking at the balconies, for example, the waterproofing condition, concrete spalling. We're looking for signs of distress, cracking, settlement, things along those lines. And the structural deterioration or the structural distress, as developed in this bill, as opposed to others that were put out there earlier on in the spring session, are really up to our interpretation as engineers. So areas of concern that would affect the structural integrity of the building, or that may need to be addressed in a more timely fashion, would be left up to the discretion of the engineer. If there's an area of concern that we need to investigate further, they've incorporated a phase 2. So the phase 2 would be invasive or more destructive testing for us at our discretion in an area that is most easily accessible or with the least amount of interruption to the association, and can be as extensive or as limited as necessary as we determine to provide a more formal opinion as to the distress or damage portions of the building. And those reports would be signed and sealed by our engineers. Those reports need to be communicated to any remedial action that needs to happen, need to be outlined in that executive summary and a limited executive summary that will be distributed to all unit owners or potential unit owners in a myriad of different ways. But the structural distress, most of the things that we're looking for are concrete spalling, settlement, waterproofing issues that haven't been reapplied in a number of years. So we're looking to uphold the structural integrity of the building.
Thank you. So the building official is required to send a notice to the particular association that qualifies for one of these inspections. I neglected to mention that these mandatory inspections are for buildings of 3 stories or higher. So the buildings that are 2 stories and 1 story, again, you're not it doesn't obviate the need for these structural inspections when they're appropriate and necessary for you to understand the integrity of your building and future maintenance needs. It's just that you're not covered under the mandatory guidelines. Rafael, this bill created a structural integrity reserve study. How is that different from what we all know to be reserve studies, and how is that going to impact your management of the associations?
Yeah, sure. So first of all, I think there are going to be some challenges. There still needs to be some cleanup work done. Requiring these associations to have a reserve study is actually going to be a great thing for all of us, because at least board members will be aware of what they should be putting away each year for their associations, and what the potential repairs, when the potential repairs are going to occur. The challenge that I'm having with the current bill right now, it's breaking down what the structural integrity reserve study. So normally a reserve study would include any component that has a value of, let's say, $10,000 or more, in some cases a little bit less, but it'll give you pretty much every component. What we're reading here with the bill is that they're going to break that down. So part of the reserve study would still be done by a reserve specialist, and then there's a portion which is going to require an engineer. And that portion is on the structural integrity portion of it. The challenge that I'm having is we have a combination of things. We have the milestone report that will now need to be conducted. And then we have a reserve study that will need to be conducted. And in my opinion, what I believe is what needs to be done is there needs to be something that maybe combines the two. Because again, just to keep costs at a more reasonable for our associations, because if you had to have an engineer for both your regular milestone inspection and then for your reserve study, costs are going to climb. If we're able to combine these two, I think it would be much easier for our associations. The other thing that I'm finding with the structural integrity portion is there is going to be an impact for many associations that already have the reserve study. How are we going to manage a situation where, for instance, in our case, we were being very proactive with our clients, and in February, we negotiated some very aggressive rates with some reserve specialists so that we can try to get ahead of the game. And we knew that something was going to come down the line. We just didn't know it was going to be this quick. And to get our associations to start already proposing reserves this year in preparation for next year's legislation. Now the question needs to be asked is these associations that had these reserve studies, what are the steps that we're going to need to take? Also needs to be a deeper question is, does the engineer need to be there on site? Because some of the reserve organizations do have PEs on staff or that own the organization. So I think there's a lot of clarification, which I believe the next year to 2 years is where we're going to obtain it. But to kind of wrap my portion up is I do believe that it's great that we have now the tools that are necessary to allow our boards to truly understand what it takes to manage an association, what it takes to really maintain a community. This has been years in the making. I mean, we've been all kicking and screaming that something needed to be done. I don't believe anyone expected it to happen at a special session within 48 hours, but it happened. So now, it's great to see we have 400 board members or managers online. I wish we had more, but we're moving in the right direction. And hopefully in the next year or two, we get some clarification on how these things will play themselves out. There's going to be a big financial implication for our associations. So we're already talking to banks, regional banks, national banks, of what ways we can come together, excuse me, to be able to finance these reserves, because that's going to be a big thing for our associations.
In Miami-Dade County and in Broward County, we had the building safety inspection report. It was at 40 years. Miami-Dade just changed it to 30 years. Right. But there are people raising questions about whether or not they're going to need a new inspection report, if they've already gone through that 40-year inspection process, or Miami-Dade 30-year inspection process, and how both of these types of requirements are going to impact, what's already been done. So you've explained that the reserve study may not include all of the items or components that was included in the past. Plus, we were talking earlier, it seems to be a bifurcated funding requirement involved in the bill. Do you have any idea how you're going to address that?
Yeah, so prior to this happening, again, we were already in discussions with some banks, because I strongly believe that something was going to happen next year, happened much earlier. So there's going to need to be creative ways of handling this, because what we're going to have is basically 2 budget cycles to get this issue resolved. So one of the ways it's either going to be break it down, like something needs to be done this year, especially for those associations that have no reserves. We're already seeing from an underwriting side, we're already seeing banks, insurance companies, everyone has basically been being much more aggressive of what they're requesting from associations. So the way I'm seeing it, it's either a combination through special assessments, through some kind of loan, because right now some banks, there's a regional bank that's in talks of being able to fully fund it and giving you a 10-year amortization. Doesn't fix the problem, because technically you're still going to be in that cycle every single time, because typically buildings are painted, depending where you're located, between 5 to 8 years, somewhere within that range. But again, it's coming up with the solutions. That's what we're doing as a management company, is really sitting with our partners to seeing what we can do to help resolve this issue for our communities. Unfortunately, we are one of the only states that, not only I should say, but one of the least, there's only a certain amount of states throughout the United States that permitted waiving of reserves. Now that's going to go away on the structural portion of it. However, really an association should really be considering fully funding, because the structural components are normally the most expensive components. So what's the difference going to be for the rest of it? You might as well put yourself in a much stronger financial position so that you can do what's right for your community. It's going to really help boards in the long haul. It's going to help boards make the decisions that they need to make. Many board members just weren't making the decision because it's very difficult to tell your neighbor, by the way, I need you to pay up $700 more a month, even though it's a fiduciary responsibility. But again, they don't get paid for it. They're the ones living next to them. So hopefully with some creative ways that we can come with banks or just do what we need to do and pass special assessments, that's how we'll have to prepare. But we have 2 years to get the conversation going and get certain things in place.
So Michael, just one last question here. You've done a bunch of these 40-year certifications. I know the building commission hasn't set forth the specifications for these inspections, but do you feel that this is more intense or more involved than what you've done for the 40-year building safety?
Yeah, absolutely. I think those that have done the 40 or 50-year certification, will be, and some of those haven't been done by engineers, as well. So that portion, I believe those associations that have done those or recently done those within the last year to 5 years will have to call back out an engineer to perform whatever guidelines are set forward by the Florida Building Commission by the end of this year, and they'll have until 2024 to become compliant. But it will be much more in depth and invasive. In some of those people that were charging $800, $1,000 to get those done, those reports will go by the wayside. Those will not be acceptable anymore. Going back to the reserves though, real quick, I do want to hit on, that basically, and Rafael brought up a great point. They won't have the ability, the boards won't have the ability any longer to say, hey, we want to do a beautification project, so we're going to push off painting, or we're going to push off roofing, for example, to do something like an interior renovation, interior common area renovation. I believe also some of the spirit or intent behind the bill, after speaking with some of the representatives, is to Rafael's point, is to remove the ability to go to your neighbor and say, hey, we need to assess you another $700 or whatever, or get the paint done in a timely fashion. This is, we're coming out there to give you a qualitative assessment that says your paint needs, is starting to fail, and you need to paint within the next 12 months. And per the phase 2, I should have mentioned as well, if you do go to a phase 2 and we do find key deficiencies in that report or in that analysis, you will have 365 days to commence or show that you have commenced on that work. If the in the phase 1 as well, if you do not have a record or a well-defined idea of the CO of the building, it will be whatever the official, the county's official record is, the first CO or the first ownership in that county. That will be your date of CO per the county. And once they send you that mail, that US mail, that certified mail that says you have to have your building inspected, you will have 180 days to have that inspection performed. So those are some key timelines to keep in mind. But the intent behind it is to give you, like we said, a qualitative assessment, and then to Rafael to make his job a little bit easier, to move some of these capital expenditure deferred maintenance projects sort of up the ladder, and make sure they're performing them in a timely fashion. And from Matt's end, I'm sure that's very favorable from an insurance standpoint, to make sure these buildings are structurally sound and safe. So, and then 3 stories, were greater. Just remember that.
I've often said that a lot of boards want to do the right thing, but they're either pressured either internally or externally to engage in projects that people see, feel, and touch. The revising the pool, or expanding the recreational facilities, or upgrading the lobbies and what have you. And they do need, in some ways, some cover, some backup to say, hey, listen, I'm not doing this because I don't think that your lobby renovation is important. I'm doing this because it's legally mandated. So we'll address that as well. But talking about timely maintenance, let's talk about the roofing issues and repairs. I mean, I have clients that are being non-renewed if the roof is even less than 10 years old. So I understand that the new law has something about denials of coverage or renewals if the roof is less or more than 15 years. Matt, can you kind of explain that to us?
Yeah, first and foremost, thank you for having me today. It's an honor to be a part of this panel. But yes, there is language in the statute, and let me just read it real quick in the new law. An insurer may not refuse to issue or refuse to renew a homeowner's policy insuring a residential structure with a roof that is less than 15 years old solely because of the age of the roof. Now, you know, Lisa, more than anybody, words mean everything when it comes to the statute, right? So the first thing I see here is homeowner's policy. Now, I specialize in commercial residential or insuring the shell of the building. So when I see homeowner's policy, I don't know if that's going to mean commercial residential, right? So that's one issue with it, or one clarification I need. Two is you have two types of carriers operating in Florida, right? You have admitted, which admitted carriers are backed by the guarantee fund. However, they have to file the rates with the state, coverages, endorsements, and exclusions, where non-admitted carriers do not have to do that. So non-admitted carriers aren't backed by the guarantee fund. Therefore, in the event something happens, the state's not going to come in. However, they don't have to file their rates or coverages, right? So with the non-admitted carriers, what you may find, they might not have to follow this requirement because they're not admitted. There's still some gray area that needs to be defined and some clarification that's needed. I hope this goes to the commercial residential side as well, but we'll have to see.
So it's always been a personal pet peeve of mine that you don't find out about your renewal rate or your renewal options until it seems like you're on the last day or the last week before it's time to renew. And Michael, we were talking about yesterday about the timelines for getting corrective work done and how you can get your roof into a condition that will be insurable. Can you tell us what you're seeing from the roofing industry and what you're seeing with respect to community associations getting in front of this problem?
Yes, thank you for having me. So on the roofing side, the commodities market has driven a lot of expended lead times on roofing materials. So currently we're seeing lead times of anywhere from 6 months to 12 months on different products. So we have a lot of customers that we've worked with for a long time that they've done exactly what you said, waited to the last minute. We need to get a roofing contract under contract, and we need to start the roof in 2 months, which isn't realistic. In our business, it usually takes 8 to 12 weeks to start any sizable condo multifamily residential property. So right now you're looking at historically 12 weeks to start, but now we're looking at 52 weeks in order just to get the material to start a project. So things are getting pushed out on that front. There's other means and methods that we have worked with customers and their insurance advisors on bringing roofs up to code. On some cases, there are things you can do on maintenance or repair methods that are more that can be done in a timely fashion to at least get a step forward to get a new insurance policy put in place.
Yeah, so Matt, I know that the carriers are requiring inspection reports. What are you seeing as far as your renewals?
Wow,
the industry?
I'm second generation insurance agent. However, I've been doing this for 15 years and I've never seen a market in the shape it is right now. The requirements that our insureds are being asked of. For example, when I first started many moons ago, you just had to have an appraisal, really, right? Now you need to provide an appraisal, windstorm mitigation, reserve study. We're getting asked structural engineering reports throughout the whole state of Florida, just not down in South Florida. So that's being asked, and that's been asked for the last year. So the board minutes. So there are a number of things being asked for from an underwriting standpoint. So don't be surprised for the owners on the phone, board members on the phone, and managers on the phone that when your agent comes to you, that they have a laundry list of items that they need in order to get quotes. Now, what you also mentioned about delivering renewals a week before. With the way the market is, depending on your total insured value, we've had some cases that have come down to the last week. However, most of the time we can get our proposals out from a month to 3 weeks out from the renewal date, as long as we have all the proper underwriting information and all the questions answered to generate those quotes. So it depends. Now, I will add that in my 15 or gosh, however long I've been doing it now, 15 years, I've never seen so many carriers leave the market over the course of the last 12 months. So the market, and we'll talk about this later on, the market is in a very fragile condition right now. And we don't need any more storms, especially with the positive results in Tallahassee this last week. So
I know that's really terrible. We will talk about, the financial influx in order to try to save the insurers. But so what I'm hearing from you, though, is 2 months before renewal, if you're an association leader, manager, board member, that's the time to start getting your ducks in a row. That's when you want to either have an inspection done or have repairs, even if they're temporary mitigation repairs done, so that when your building is inspected, you're not reflecting any leaks, you're not reflecting ponding or other conditions that are really going to make it unfavorable for you. Michael, what
can I add something there, Lisa? Because I think the sooner, especially if I have clients on the phone that I haven't talked to since the special session and what's transpired, I think the sooner you can get ahead of this, the better. I think if you wait 60 days out, Michael will tell you, and some of the other contractors and engineers will tell you, you may not get it done in time. And keep in mind, there are a lot of carriers that are drawing a line in the sand and making it crystal clear, if we don't have A, B, C report or these items, we're not providing a renewal quote. So I think the more you as a board or manager can get ahead of this now, the better off you'll be from an insurance standpoint.
Michael, what can you do? What are your
One thing
recommendations?
I'd like to add to that, what we've done with a lot of our customers that have a 10, 15, maybe even a 20-year-old roof, that we've been performing preventive maintenance on, remedial actions, inspecting it once or twice a year. We have worked with them and their insurers with providing those reports that the roof's been maintained and is up to par. And I believe that's helped. And I'm not on the front line, I'm on the back side of it. So, Matt can talk more to it, but with the customers that we have that we're maintaining the roofs and keeping them up to par and doing the inspections, it seems like they have less issues with going down the road. It's the customers that put the new roof on, forget about it, never go up and look at it unless there's a problem, that seem to have the dire need to, oh no, now we got to replace this because we didn't fix one thing on the roof and now our whole roof is shot. I can't tell you how many times we install $1 million job and then 7 years later they're coming back to us to re-roof it again, and it's nothing we've done wrong. It's they didn't maintain the roof, or the brick walls around the roof, or the HVAC unit was leaking in the roof, and next thing you know, their whole roof is delaminated off the deck.
Yeah, that's so important. We always recommend that you have maintenance contracts on your major components. I mean, by law, you have to have an elevator maintenance contract. In order to maintain your warranty, typically you have to have some type of maintenance contract or perform maintenance work on it at a minimum of an annual basis. And it becomes very problematic if there is an issue and you're trying to seek warranty repairs, or you're trying to seek performance under the warranties. So, but can you even get insurance if there are unrepaired damages to the property? I mean, I still have clients that are struggling with Hurricane Irma repairs, if you can believe it.
It's tough. I mean, if you have work that needs to be done to the buildings, or you have claims history, I mean, not everybody can go to Citizens, right? They may even turn you down. So what you may find is the only option you have is a Lloyd's, a London option, or a layered option for much more than what you were paying for. So depends on your situation. It depends on the damage. It's going to cost you if you do have tarps on the roof and damage hasn't been fixed to the buildings. You're going to pay a much higher premium than your peers.
So let's move on to talking about the insurance industry generally and the insurance crisis. I want to first turn to Rafael and ask him what he's seeing and how his clients making do. I mean, how are they handling the increased premiums and how are they funding it?
Yeah, so it's been all over the place. A lot of it has to do where the property is located. We've seen some as low as 10% to one that doubled for one particular community. Most associations are just not prepared for 100% increase in insurance. I mean, it doesn't matter who you are. ultimately an association is a nonprofit organization, so it's a zero-sum game. So you're taking from somewhere if you have the capital available. For this particular association, what we did was just have to request it directly from the owners, because if we would have tapped into their regular operating, we would have put them in a very tight cash position. They didn't want to take a finance option because we did have already some connections with the banks that were willing just to extend it that extra month and give them a line of credit for 12 months to be able to pay it. So right now, the only way that they're really dealing with it is just understanding what the potential cost is, what we could do in the near future, if anything. So if the roofs are in bad shape, okay, it's time for us to, get these things moving forward. If there's any other enhancements that we can make that can mitigate the potential increases in the future. But really what we've done is just been in crisis management, to be very honest, working very closely with our partners to see if there's any other ways to get a potential decrease, which that's not really possible, but more than anything is figuring out how we're going to manage the cash flow position for the association. So it's been a very challenging year, and it's going to continue to be for the next couple of years. But sometimes in life, you have to go through some pain to really get to where you need to be. And that's where we are as an industry. I've been doing it for 15 years, and we've been all kicking and screaming for a very long time. And it took, unfortunately, 96 lives to get lost for things to move in the right direction. But we're going to need to manage through this and understand that things are, everyone is saying it's going to be more expensive. But if we would have done this from any association would have been built and properly planned and properly budgeted, we really wouldn't be having this conversation. I honestly believe association would be a little bit easier to live within, because again, the board members will make the right decision. Many times we get focused on that 1% to 2% that break the law and do what they need to do. But again, the majority of associations, as you said, Lisa, board members and managers do what's right for their community.
Right. I also think in the industry and in the world generally, the true costs of ownership are not adequately either explained or understood by a large percentage of purchasers of multifamily properties.
Correct.
So it depends on your personal situation. You may think that you buy into the property, everything is taken care of, but it really isn't taken care of if you're not looking at the long-term impacts of the actual maintenance programs. But Matt, I've heard a lot about this RAP or some of that cash influx. What is that, and how is it going to result in reduced premiums, or just explain it to us?
Yeah, I will. And let me take just a step back real quick, because I think a lot of folks are trying to understand why the premiums are skyrocketing, or why have they had 3 straight years of 20+% increases or higher. I started in the industry in 2006, second generation insurance agent, but I got licensed in 2006. And that was just after the Hurricane of the Month Club, right? When you could turn on the TV and you could physically see what 8 storms did to Florida over a 2-year period. We literally had the Hurricane of the Month Club. I take that from my buddy, Tim Fulmer, but seriously, 8 storms impacted our area or our state in a 2-year period. You saw max exodus of carriers. And again, people could see it. They read it in the paper, they turned on the news. Folks can't see the litigation. They can't see the hidden costs of this litigation that's occurred. Now, why are we having this reinsurance program in place has everything to do with the fact that our market is teetering on collapse. Since 2013, we've had 519,000 lawsuits against property insurers. Well, what does that mean from a dollar and cent standpoint? 15 billion in claims costs were paid. That's 15 billion with a B were paid during that time period. 71% went to attorneys and 8% went to consumers. So there was a big disconnect with what was going on in the settlement of claims. And so I point that out because we had a man-made disaster that happened in 2004, 2005, we had Mother Nature in 2004, 2005, and a man-made disaster with the litigation and law changes that made it more favorable. Now, during the week of chaos last week, and by the way, I was up there for the whole week. I didn't think we were going to get anything done, and boy, was I wrong. One of the things they added was a reinsurance assistant program. In other words, insurance companies operating in Florida can go and get reinsurance from this carrier. Now or from this entity, there's $2 billion in a pot. And instead of going out and paying for this reinsurance money, they now have access to it. So we'll see how it plays out. Now, if they accept to be in the RAP program, as they call it, you have to pass a savings down to your clients. So in order to be in the RAP program and have access to that free reinsurance money, you have to pass down a savings. So I read an article this morning that one of the homeowners carriers, they were projecting about a 3 or 4% savings that they were going to pass on to their clients. It's too early to tell on the commercial residential side on what impacts it will have. Now, for the clients on the call, I'll definitely have a write-up to y'all once we have a better idea of what we think the impact will be. But again, if they join the RAP program, they have to provide a savings down to their client.
That's the carrier that joins the RAP program.
Yep, the carrier, their actual insurance company. See, the litigation problem in Florida wouldn't have been as bad, or would have been easier to handle if 79% of our market wasn't Florida domestic carriers. By Florida domestic, I mean 75% or more of their business is in Florida. They're not taking premiums from Kansas and other parts of the country.
Mm-hmm.
You know,
I hear what you're saying with respect to the litigation costs, but it's so difficult to present a claim and actually be paid for the value or the amount of repair that is necessary. Michael York, I'm sorry. How can, what can an association do, like after a loss, to effectively present its claim to the carrier?
Yeah, so addressing, that's a great question, is working, with an individual that's well-versed in expert witness, in cost analysis as well. So, having somebody come in that knows what the localized cost is and can perform a root failure analysis to educate and inform that insurer, their legal counsel, and then what is, the full repair cost separate from, all the other fees, attorney fees, et cetera, that Matt's discussing, to make sure that the claim is paid fairly, and the association has enough funds based off local market data for, for transit cost, for labor, for materials, et cetera. As Michael alluded to earlier, it's a very difficult time. So if you're relying on a roof average for, a national roof average, we're exponentially higher than someplace in Kansas, like Matt mentioned. So making sure you have local data and somebody that has a full scope of work for that repair is instrumental in making sure that association is taken care of. If you just say roofing tiles and it comes in at $1 million, but you forgot about underlayment, you forgot about the replacement of plywood, fascia, painting, et cetera, you could be looking at several $100,000 of missing funds that falls back onto the association. So making sure you have somebody that's well-versed in the reconstruction process is key and fair for everybody involved.
Yeah, we're not going to have time today to talk about the changes in claim filing or claim handling. I mean, there's changes to AOB, the assignment of benefits. There are restrictions on what assignees can do or not do with respect to your claim that could make it less desirable for some of the some of the contractors to actually take the assignments. But what you just said is very, very important, and it has to be reiterated, is that any contract that you enter into for any type of work, it doesn't matter if it's pool servicing or significant repair of the building, you have to have a clear understanding of what the scope of work is and what the scope of work needs to be in order to get the job done. I found this so many times when it comes to elevator contracts, where you'll have a bid to perform all kinds of work because the elevator is going down too often, and they give it to a good elevator consultant. They scratch off half the things on the list saying, you don't need this, you don't need this, you already have this, you don't need that. And then they add in another half dozen things and say, but this excludes this, that, and the other thing. So if the association went with the original contract, they wouldn't have the work that is necessary, and they'd be paying for things that they just don't need or not broken. in
Yeah,
that particular
and I
situation.
think one of the key things that was presented in this bill that, sort of helps all of us and really helps Matt as well, because the insurance companies, they're not bad companies and they do want to pay as long as it's a legitimate claim and it's well verified. I think Matt would attest to that. Now, they never really want to pay a claim, but if it is a well-defined claim, then they're okay. But what they did do is they do require our reserve studies, the structural integrity reserve studies, and our inspection reports, the milestone inspections, to be kept and presented for up to 15 years, which is a significant change. The other change that they indicated on this bill here is that all work orders or contracts entered into, or bids, I should say, not work orders, bids, they have to keep for up to 1 year, which is a big change. So I think that eliminates a little bit from the board or people trying to filter in their friends to do work that isn't not only verified but doesn't have the proper specifications and scope of work. It removes all of that, and it creates a clear alley for well-vetted contractors that are going to take care of the association and are going to be able to respond in the event that there is an issue moving forward. So I think that was a good, smart change that the legislature made.
Can I add something? Can I just repeat something Lisa said? Before any boards or managers engage in any type of contract, please have it reviewed by your association attorney. I think that's worth repeating 100 times, because from a directors and officers standpoint, coverage standpoint, we always like to see their attorney always review before you enter into a contract. It's worth saying again.
Well, yeah, thank you for saying that. And as the attorney, we obviously can deal with the legal components of the contract, making sure that the warranties are in place, making sure that you're protected against subcontractor or supplier claims. But as far as the scope of work, that really requires the expertise of whoever's going to be performing the work or a design consultant that can help you. One thing I neglected to mention earlier, Michael Kornahrens, is about the changes to the building code that may come about, or that are to come about as a result of these two bills. Right now, I understand if your roof is more than 25% damaged, the carrier has to pay for you to replace the roof under most circumstances. How is that going to change, and how is that going to impact the building owners, the building users?
Yeah. So historically speaking, if it was over 25%, you're correct. You'd have to re-roof the building. And that goes for recovery if the roof was wet or had other damages to it. Now with this new bill, the way I read it is if the current roofing system that is installed is to 2007 building code, which was published, I believe, in March of 2009, just for reference. They do not have to replace the whole roof. You can repair the section that is damaged. So therefore, if you're only have 50% of the roof damaged, you can just replace that 50% of the roof that is damaged under the new code, as long as the original roofing system that was installed meets the 2007 code. There's some other challenges from a technical standpoint that I'm not sure we can have time to go into, but there's means and methods so that there's not such an large capital expenditure.
Right, so that actually does deserve a more detailed discussion that, of course, we're not going to have time today. For one thing I did want to mention is that you have to also pay attention to your local codes and ordinances. Highland Beach adopted an ordinance requiring certain inspection requirements. Boca Raton adopted an ordinance. One of our participants today said it applies to buildings that are 2.5 stories or 2 stories. So it's not it's not necessarily reliance upon the state law. You have to also take into consideration what your local municipal government has done in order to ensure that you remain in compliance. So we talked about a whole lot of doom and gloom. I mean, some changes that are going to be beneficial, that I hope will be beneficial. But let's talk about like what we can expect going forward, and how we can become prepared to address the challenging needs that are presented by these two laws and other considerations. So Rafael, I think you talked about also obtaining lines of credit or a loan, but what should an association be planning for, like, right now?
Yeah, so right now is just really putting a plan of action together, understanding what your current circumstance as an association, excuse me, is, Not every association doesn't have reserves. There are some associations that, have a certain amount of money put aside, but really working with your partners, putting together a plan of action of what the steps you're going to take and what steps you do need to take. Because in some instances, like some of the individuals put in the Q&A, they may have done a 40-year recertification. So it's probably going to be a little bit easier for the engineer to give you that phase 1 report, just because they were maybe there a couple months ago or less than a year ago. For those associations that haven't had one done in a long time, I find it very hard that, a board is going to move, the engineer's just going to sign off on a phase 1. They're going to probably go into a phase 2. But really understanding what the current circumstances are, start talking to your vendors and your partners, start understanding what their timelines are, because right now engineers that are specialized within our industry, they're all becoming very busy if they're not busy already. Same thing goes with your reserves. Now you're going to have to combine those two and start understanding, okay, what are the timeframes? What are we looking at? What are the estimated costs? So you could start already building, let's say, a simple Excel spreadsheet of what potential costs you need to set aside to at least meet the minimum standards of what the new law is requiring of you. Then at the same time, working with your banks, if you're a self-managed property, if you're professionally managed or professional your managing company will already have some partnerships, and reaching out to your banks, seeing what creative financing they're coming up with. As I mentioned earlier, I've already had some discussions with some of the vice presidents of the local banks, and they've already been coming up with creative structures of how to be able to fully fund these reserves for these associations by financing it for them. And then the last and most important piece in my eyes is already start communicating with your residents. Not everyone reads the papers, not everyone attends the webinars that we do within our industry. So just start letting your residents know, listen, this is what came to law. This is what we're doing as a board. We don't have all the information yet, but we do know that we're putting this information together with our partners, and then start preparing for either town halls if you're in that situation where you have no reserves, so that you can already start preparing your residents for what's to come. Unfortunately, this is occurring, I should say, when we're starting to walk into some kind of recession. So it's going to be challenging, but it's not something that you need to panic. It's just really, again, getting with your partners, coming up with the potential solutions, presenting it to the membership, and moving forward. At this point, really, this is happening. It's more of really ironing out some details that we're all not too sure of as of yet. But again, as an association, get that information out there, start putting your plan of action together, and start communicating as soon as you can.
Well, thank you. That communication element is really, really important. It's one of the reasons that I said before that the boards need some protection. They need some backup but explaining it to the owners and explaining how they're going to go about it without displacing people or without creating huge financial hardships that are going to really change the character of the community is a lot more difficult. So Michael York, we talked about earlier that there are 2 million people in Florida living in condos that are over 30 years old. So even excluding the Miami-Dade and Broward counties where we had those 40-year certifications already in place, what are you seeing from an engineering perspective? And if the visual inspection has to be performed by an engineer, are there enough professionals in Florida to do all this work within the next 24 months? 18 months,
absolutely
really.
not. Absolutely not. There's not enough professionals. So, from our industry, what I would tell you is build your team right now. It starts with your management team and your general counsel. And now I've preached this for years and years, but now has never been more important is now to build a well-defined team of individuals from management, general counsel, insurance, and engineering, and make sure that those industry professionals have other professionals like roofers, painting contractors, restoration companies that you can trust. Plan early. That's what I would tell you, is just plan, start planning right now. Don't wait until 2023. Don't wait until 2024, most certainly, but start the planning now, because it is going to be a sticker shock, not only for the inspections, but also for the funding and the restoration work that needs to take place, because roofs have been neglected. The insurance companies are also throwing on new roofs as well in a more timely fashion. Materials are a nightmare for them. The painting industry was affected by the Houston, by the Texas freeze. They're getting caught back up. So plan early and start now. Make sure that those professionals that you have a well-defined scope of work, as we mentioned earlier. It's extremely important that you're not cutting corners and that they have a systematic approach to those projects. And then last but not least, I would say experience. There are billions and billions and billions and billions of dollars up for grabs from the association world right now. We know that. We've been in this market for 26 years serving the state of Florida. We're not going anywhere. We walk, eat, and breathe in these communities. So our reputation is important to us. Our reputation with Lisa, with Rafael, with Matt, with Michael is extremely important to us. Make sure that you use professionals that have experience in this industry and in our market that can take care of you and will be here in the event that something happens to you as a storm, or that you have something such as a claim needs to be filed from a management standpoint. So make sure you're using local people that have experience in this market, because they will start flooding here momentarily. We're already seeing that.
I can tell you from personal experience that negotiating contracts with engineering firms has become increasingly difficult because the engineers are really in the driver's seat, and a lot of the things that we could have expected in the past are no longer easily expected. Like there's limitations of liability, which I understand from your and carrier's perspective. You need to have certain protections so that you're not exposed to unjust claims. But again, those limitations could be a little bit onerous, and some other provisions that are not 100% savory. And for those boards out there that think, there's been reserve requirements in the law forever, and our reserve study was never fully complete anyway. We only had the roofing, paving, painting. We didn't have our elevators, we didn't have our seawalls, we didn't have our pool pumps and expansion joints, or some of the other things. Well, now the law says that the failure to complete the milestone inspections will be considered a breach of fiduciary duties. So what does that mean? That doesn't necessarily mean that there's going to be any personal liability. I don't want anyone on the line to be afraid of incurring their personal liability. I do want you to be cognizant of your fiduciary responsibilities to the owners, to the building, and to yourselves. Talking about insurance, Matt, is there any light at the end of the tunnel, or what do we think is going to happen going forward?
When I was driving up to Tallahassee last week, I didn't think anything would come out of the special session, and it did. I do think there's light at the end of the tunnel. I do. History tends to repeat itself. If we recall, we went 10 years without a storm. 10 years without a storm, the free market after the Hurricane of the Month Club came back. In some cases, we had 2 or 3 or 4 quotes for associations. When that occurs, competition occurs. We can pin the carriers against each other, and we get the best terms, conditions, and pricing. So I'm hoping that history will repeat itself again, and I am staying positive, especially after what I saw last week in Tallahassee.
And Michael Kornahrens, you talked about the importance of having a maintenance contract. What are the most common failures, and what are the easiest ways for association to forestall having those kind of problems?
Yeah, annual inspections and preventive maintenance on the roof. The example I use for everybody is you don't drive your car for 2 years and never change the oil or rotate the tires, right? And that always seems to sit home. So if you let your roof that's exposed to UV light and all the elements of the environment day in and day out, and don't have anybody maintain it, clean the drains, the drip edge and things of that nature, the counter flashings, you're going to have premature failures on those roofs. They need to be maintained. And I've seen so many cases where a good 20-year roof is only lasts 10 years because of lack of maintenance, right? You drive your car and never change a tire, you're going to have a blowout in a couple of years. Or you're going to blow your engine up. So that's the example that I always use. And one thing I'd like to add to the budgeting side and the financial side is make sure you're working off real-time numbers, because the material crisis and the supply chain, roofs have gone up 30% over the last 12 to 18 months due to material increases. And trust me, the contractors aren't pocketing this money. We're eating costs left and right from shipping to materials. So make sure that you're budgeting off of real numbers. A real life example is most of the major manufacturers don't even tell us what we're paying for the material until it ships.
Oh,
So,
man.
so that's not a lot of good news there, but the good news is if you get ahead of it and maintain your roof, you're going to have a long lasting roof that's done by a reputable contractor. And I did what Michael said as well, is I see guys come into town, win a condo job, do the roof, and then I get the call 7 years later, can you come bid this job again? And we already have the file in the system, and it's kind of comical because of, they always end up in litigation. So
To add to that, again, let's go back to the contract. You need to know what work is going to be performed and what you're paying for. Having a contract that says replace roof is not adequate, in my opinion. What does that include? Does that include, what type of roof are you getting? What what code is it going to be performed under? Obviously needs to be inspected, and there are a lot of other things. Again, we just scratched the surface here today, and we're basically out of time. We didn't even get to cover many of the legal issues being in the panelists. So, and some of the actual mechanical issues, like how do you inspect a foundation visually, or structural portions of a building that are not easily visible? I mean, that are concealed by nature. How do you determine what the remaining useful life is, or whether there's any deterioration? We didn't talk about how to deal with waterproofing issues for the exposed limited common elements that have been subject to owner modifications over the years. How do you allocate the cost of those? Can the association divert or distinguish costs based upon what portions of the property are for which each person bears responsibility? How to handle the backlash from owners, from buyers, from lenders? I mean, the lenders are of course becoming increasingly scrutinous of loans, and how to address boards that want to ignore these requirements, or just cannot accept the reality of today. So again, there's definitely a need for us to go and present additional material to you all. And we have 61 questions. I think I've answered maybe 4 of them today. I just want to leave with any last word. I want to thank our participants. It was a short turnaround. The bills came out on Friday or Thursday, and it's now only Tuesday, and we're already talking about them. So these the ink hasn't even had time to dry on these things yet. We don't know how they're going to flush out. We really do need to have additional discussions. Thank you all. And if there's anyone who wants to say some last words, Michael, because you're the left top hand of my screen. So Michael York, anything?
No, I appreciate all of you guys taking the time to be here today. I think one of the most important things that you can do on behalf of your association is the education component, whether you're just a unit owner or you serve as part of the board, to educate yourself and understand what's coming and how you can best serve your association, and utilize the people that are industry professionals, and not to toot Lisa's horn, but make sure that you engage, especially with your general counsel in your management company, to interpret different parts of the bill and possibly the insurance portion of it as well. Or with Matt, he has a lot of insight on that, but make sure you understand what the bill says and how it reads before enacting any policies.
And whether your existing reserve studies are adequate or not adequate, whether your funding needs to be modified to reflect the mandatory funding versus what could be considered non-mandatory funding if it's not related to the structural integrity. Rafael, how about you? Last words?
Yeah, sure. Similar to what Michael said, thank you all for having us here. I wanted to thank you, Lisa, for allowing us to be part of it, and thank Jeff and Michelle behind the scenes that make all this happen and make it simple for us. But for board members and managers, just take it one day at a time. We've dealt with 1,000 challenges with different hurricanes, with COVID. We'll get through this as well. It's just going to take, managing with our partners, managing with our vendors, and just being patient and putting together a plan of action. I did want to throw at Matt, because I know Matt is pretty politically connected. I think the private sector can help solve some of these problems. How you have mitigation reports. If insurance companies just say, hey, if you have a maintenance contract for your roof, a maintenance contract for your windows and all of that, we'll give you a discount, kind of how Geico does. I think that that would help and push our board members to do what they need to do, and they'll have record of what's been done and what hasn't been done. But just wanted to say that. Thank you all for allowing me to be here today.
Thank you. Matt, any final words?
No, thanks for the opportunity. I think I'd just add, hurricane season is here, starts today. So if you don't have a game plan in place, make sure you put one in place. And if you do have one in place, make sure it's updated and ready to go. Have a pre and post game plan. You never know. I've been told we're supposed to have an active season, so be prepared. But thanks again for having me. I really appreciate it.
Thank you. And Michael Kornahrens, any last words?
Thank you for the opportunity, and I did what Matt said. Just make sure you got the inspections of your roofs done, and before this hurricane season, and you got your preventive maintenance done, so you don't have any issues down the road. So.
Thank you all for participating. We've had 490 people on the call from various times, or on the participating in the presentation at various times. This is really, really important. There's a whole lot of issues to be addressed, and there are a lot of obstacles especially you in the management industry are going to face, and in the legal industry, when facing our clients and our clients' objections to some of the changes. There were plenty of questions that weren't answered. As I said, we're going to post the actual video on the KBR website. I'll distribute it to the other participants so that they can likewise post the video. And we'll also distribute the questions so that at some point within the next few weeks, we'll have a lot of the questions answered on our website that you'll be able to review at your leisure.